Today's financial market update, the most important market insights and investment ideas you need to know. Market sentiment is bearish, mild. Market is declining across major indices. Index performance, S&P 500 at 0.57%, Dow Jones at 0.23%, NASDAQ at 0.59%, Russell 2000 at 9.33%. The stock market sentiment is currently bullish, supported by strong economic indicators and rising consumer confidence. A bullish market sentiment indicates that investors are optimistic, which can lead to increased investments in sectors showing growth potential. Investors should explore opportunities in renewable energy stocks, as the current market sentiment favors sustainable growth and innovation. Households with annual incomes of $160,000 or more are increasingly feeling the pinch of rising inflation. The financial strain on high-income households suggests that inflation impacts consumer spending, potentially leading to reduced economic growth. Consider diversifying portfolios to include defensive stocks, as they tend to perform better during inflationary periods. Abacus Global Management (ABX) achieved a remarkable 116% revenue growth in Q4 2025, with yearly revenue doubling. The remarkable performance of Abacus Global Management suggests a strong recovery and growth potential, making it appealing to investors seeking stability. Consider investing in Abacus Global Management to capitalize on its strong growth trajectory and positive market sentiment. The S&P 500 has experienced a 3-week losing streak, marking its first such decline in 1 year. The S&P 500's downturn indicates a potential decline in consumer confidence, which may lead to increased market volatility and investor caution. Consider investing in defensive stocks or sectors that traditionally perform well during periods of economic uncertainty and declining consumer confidence. The effective federal funds rate has decreased from 4.3% to 3.64% as of February 2026, indicating a shift in policy. A reduction in the federal funds rate typically signals the Fed's intent to encourage spending, which could revive economic activity. Consider reallocating assets towards growth-oriented sectors such as technology and consumer discretionary, which often benefit from lower rates. Britain's economy stalled unexpectedly at the start of the year, raising concerns over GDP growth and future economic stability. The stagnation in Britain's economy suggests a potential slowdown that could impact consumer spending and business investment, signaling caution for investors. Consider diversifying investments geographically to mitigate risks associated with the stagnant British economy and look for opportunities in emerging markets. Oil prices have surged recently, with projections indicating a potential rise to $200 a barrel due to Middle East conflicts. The spike in oil prices signifies increased inflationary pressures, which could impact consumer spending and overall economic growth moving forward. Consider increasing allocations to energy sector stocks or ETFs to capitalize on the rising oil price trend while managing associated risks. The S&P 500 is facing its first 3-week losing streak in a year, indicating market uncertainty. A 3-week losing streak for the S&P 500 suggests investor caution and potential bearish sentiment, warranting close monitoring of market trends. Consider diversifying your portfolio to hedge against potential volatility in stocks, especially in sectors sensitive to oil price fluctuations. The U.S. has deployed 2,200 Marines to the Middle East amid rising tensions, signaling a military pivot. The U.S. military deployment indicates a heightened risk of escalation, which could disrupt global oil supply and increase prices further. Consider diversifying portfolios with energy stocks or ETFs that benefit from rising oil prices to hedge against inflation. Xcel Energy has initiated power shutoffs affecting 18,000 customers in Colorado's Front Range due to high winds. The proactive power shutoffs highlight the fragility of energy infrastructure, indicating potential vulnerabilities in energy supply during extreme weather events. Consider diversifying portfolios with energy stocks, as rising oil prices may benefit companies in the oil and gas sector. Recent data indicates that Chinese households earning $160,000 or more are experiencing significant financial challenges and instability. The financial struggles of high-income households suggest a potential downturn in consumer confidence, which could affect broader economic growth. Consider diversifying portfolios with companies that offer essential goods and services, as these sectors may remain resilient amidst reduced spending. The iShares JP Morgan Broad USD Emerging Markets Bond ETF BMB currently offers a yield of 6.37% and an annual dividend of $3.37 per share. A 6.37% yield from BMB indicates a strong potential for income, especially appealing in a low-yield environment for fixed-income investors. Consider increasing your allocation to BMB for its attractive yield, especially if you are seeking higher income from emerging market bonds. The National Stock Exchange of India is set to launch its initial public offering (IPO), attracting significant attention. The IPO could lead to increased stock market activity, which may boost investor confidence in related sectors like real estate. Consider diversifying your portfolio by investing in real estate investment trusts, REITs, that may benefit from increased market activity. The National Stock Exchange of India is set to go public on March 13, 2026, attracting international investment interest. The upcoming IPO from the National Stock Exchange of India may create new avenues for private equity investments, potentially enhancing market liquidity. Monitor the National Stock Exchange's IPO closely, as it may present unique investment opportunities in emerging markets and sectors. Ciena Corporation has launched new networking innovations designed specifically to enhance capacity and efficiency for AI workloads. The advancements in networking by Ciena indicate a growing commitment to meet the increasing demands of AI applications, which can drive future profitability. Consider investing in Ciena Corporation, as its networking innovations position it well to capitalize on the booming AI market demand. There's been no significant news in the crypto or digital asset space over the last 5 days. The lack of news in the crypto sector suggests a period of stagnation, which could lead to increased investor caution. Consider reducing exposure to volatile digital assets until clearer market signals emerge, minimizing potential risks. Recent reports indicate that offshore wind projects are facing extensive bureaucratic delays, hindering timely development and deployment. The bureaucratic hurdles signify a potential slowdown in renewable energy's growth trajectory, which may lead to cautious investor behavior in the sector. Consider diversifying portfolios to include companies with strong regulatory relationships, as they may navigate bureaucratic challenges more effectively than their competitors. Thank you for watching FERPA, your financial Sherpa.